Greetings, Cretan learners. My name is Mr. Simbi and welcome to today's accounting class. In today's class, I'm going to be talking about combined cash and credit transaction. And my focus is going to be on the trading stock account. Did you know that a business will buy stock in two ways, on cash as well as on credit? Most businesses will prefer to buy stock on credit in order to improve their liquidity position. By the end of this lesson, you will be able to, number one, prepare a trading stock account. Number two, relate source documents to their respective journals. Thirdly, complete incomplete journals. You will also be able to understand internal controls that relate to your trading stock account. At this moment, you should already know your CRJ, your CPJ, that is your cash payments journal. You should already know your petty cash journal as well as your debtors journal. At this moment, you should also know your debtors allowances journal, your creditors journal, your creditors allowances, as well as the general journal. Here are new words that you should learn in today's lesson. The first one is stock control. What is stock control? These are internal control measures that are put in place to ensure safety of trading stock. It is very important that as a business, we get to look after what belongs to us as a business. And one of the important assets that a business owns is trading stock. So there should be what we call stock control, having internal control measures in place that will ensure that our stock is well guarded. That is very important because the moment we don't have such measures, our stock can get stolen, damaged, and we will lose so much money that is not going to be recovered if stock is not well looked after. Definition. What are cash transactions? These are transactions that involve immediate payment of cash, banknotes, or debit card. These are what we call cash transactions. So it has to involve an immediate payment of cash, that is your banknotes or a debit card. The next definition that we're going to look at is credit transactions. What are we talking about when we say this is a credit transaction? These are transactions that involve the sale or the purchase of goods and payment being made at a later date. So what we're saying is a sale can take place or a purchase can take place, but the payment will then be done at a later date. It is not immediate as we saw in cash transactions. Once you understand the difference between cash transactions and your credit transactions, it then becomes easy for you to know, do you record it in the CRJ, the CPJ, or you record it in the other credit journals? Let us go for an ad break. See you shortly.